Hello. So I really wasn't planning on doing another video on SolarEdge, but since I got two comments which are super exciting, really thank you. Please continue commenting and writing me. I decided I will. Why not? I really want to make it quick, a little update, but more it's gonna be. You'll see why in a minute. Just adding a few more insights and a few more thoughts about SolarEdge, and eventually I want to do like another try to just see like the possible valuations, the fair values, and the, I don't know, like a price target for SolarEdge, which spoiler alert, my main point would be that it's really hard and the range is really wide. So yeah, but anyway, I didn't really do another deep dive. I didn't really read all the reports and listen to all the transcripts. I really skimmed through, so it's gonna be a little bit superficial, and that's why I want to make it quick also. So overall, the main point is nothing really changed much. The status is pretty much still the same, where demand is really low at this point, and the inventories are really high with SolarEdge, with its distributors. It's trying to get rid of all this inventory, and it's gonna take still a long time. It's gonna take probably at least a few quarters more until things start to stabilize in terms of demand and the inventories. So all this is pretty much the same. Right now it's having really a lot of costs. It's gotten even to negative gross profit margins. It's burning cash because it has all this operating company and practically no sales at this point. But we knew that. That's what there is at this point. But I'm going to talk about the cash situation. So pretty much everything I said still holds up. So what I do want to do is more like to reiterate my conclusions from my previous video and make them maybe more to the point and more definite. I think that overall my conclusions from my last video were that SolarEdge is a super risky, pretty much speculative play, because it operates in a really highly competitive environment with an industry that is super young, that is developing, that might go through a few revolutions in the next few years, where technology is constantly changing, and where there are so many players, where we don't know which ones will emerge as the winners at the end. Most of them won't, and the industry will go through probably some consolidation and some commoditization, where the premium products are becoming just generic, and everybody's offering pretty much the same. I think that's the huge risk. I still think so. Nothing has changed in that department for me. So when I try to think whether SolarEdge could be a good investment from this point on, look at a few years ahead. I think the visibility is really poor in terms of how long it will take SolarEdge to get out of this rut, or even to just stabilize in terms of revenues and profitability, and get out of hopefully get out of losses, and to stabilize some form of cash flow inflow. So it could take a long while. It really depends on how it will be, how much will it be successful in restructuring its costs, and we don't know, and it's still super dependent on the interest rates, which we don't know where are gonna go. Everybody is expecting interest rates to go down, but if inflation continues, and there are good reasons for it to continue, interest rates will not go down for the foreseeable future, so at least a few years. So it will affect tremendously SolarEdge, and the electricity prices, and the regulatory environments in Europe and the United States, and the residential and the commercial. It all affects SolarEdge, so we have no idea where all those things are gonna go in the next few years, and therefore it's really hard to even estimate, even roughly, where the revenues of SolarEdge could be, and even more difficult where its profits might be, or losses. So the next few years are super unknown, and it might take it's not necessarily going to take just a few quarters. It might take years because it's so dependent on the macro environment also, which we don't know. We might be heading into a recession right now. And even if not, it's the whole situation where the demand suddenly pretty much stopped. I mean, such a abrupt slowdown in demand. It's so just goes to show how unpredictable it is, and we don't know where it's gonna go in the next few years. So yeah, we really don't know. But my whole point is that even if we're patient investors and we wait until we get out of this down cycle, which is pretty much a cycle, the whole point is, I don't know, for me, where SolarEdge will be at the end of it in terms of its position in the market and its the uniqueness of its offering of technology and its ability to maintain its market share, and also on the financial side of things, even if it does maintain a nice share of the market, what could be its profitability profile where prices are going down and margins are gonna get thinner, no doubt about it. And there's so much competition and new products are entering, so they're gonna have to adjust their prices based on all kind of factors, and everything that is going on right now. When they're taking more debt, they might dilute shareholders. They might. So even if revenues do stabilize, even if they don't necessarily get to previous levels, even if they do stabilize on some kind of a good enough level in a few years, in like 2, 3 years, 4 years, where would be the profits? I don't know. And if I look even 7, 10 years ahead, it's even more unknown exactly in those terms of the market share, and how will the industry even look in 10 years from now. It will probably again go through a few revolutions. So I don't know, it's just super risky. I find it very speculative. So that's my conclusion, and that's the big picture, which really hasn't changed, and it probably will not change. So yeah, that's my overall thoughts on SolarEdge that still are. So having said that, that's the big thing. That still is the big thing. I do want to add some updates, or maybe some just a few more insights to add to my previous video, and just a few things that did happen in the meanwhile. But I really want to go over it quick because I already said the big important thing, I think. So just a few more thoughts. So the first thing to watch right now, and the biggest concern with SolarEdge, are the price reductions. So it really relates to what I was just saying, but we already see that happening. Obviously, it's going to happen when they have so much built up in inventory, but also the competition. We knew the price cuts are going to come. We always knew that, and it's happening right now already. Now they're reporting it. Their average selling price is down. They're doing all those discounts, of course, to get rid of the inventory. But not only, I don't think that's the only thing that it's a combination, of course. So I think that's one of the major things that are gonna affect near-term, mid-term, and long-term SolarEdge, wherever the revenue level will be. If they reduce prices, and they have to, and there is so much competition that their profitability is really gonna suffer, and it's not that they're lowering the prices and just in a couple of years they will be able to raise them again to the previous levels. It's not gonna happen. It's pretty much irreversible because of the high competition in the market. I mean, they can adjust prices, inflationary and stuff like that, but overall the price levels are going down, and we don't know where the margins are gonna be. I mean, that's huge. So that's just to stress it, and that it is already going on in the last few quarters. And okay, the second thought is regarding its cash flow and the balance sheet. So obviously everything that is going on right now will affect SolarEdge's balance sheet. I mean, we'll see just how much. So right now SolarEdge is burning through cash at the trailing 12 months cash burn rate is around 400,000. I hope it's gonna get a little bit better because now they're restructuring their costs. They're doing massive layoffs, and obviously they need to adjust everything. They're manufacturing everything, so I hope they will begin to burn less cash. But for now, it's just growing. So they are burning cash at this point, and they have their debt. There's convertible notes are due next year in 2025, and it's 600,000. So they're already preparing themselves for that, and right now they're taking on more debt. So they offered more notes at 300,000. I think that's just the beginning. They're probably gonna need to raise more capital, but we'll see. And of course, I don't know how plausible it is right now, but they might also maybe issue more shares. I mean, it's not gonna bring them too much with the current share price, but they might. If they're a bit desperate, they will dilute shareholders and they need cash. So so there will probably take more debt. There will be higher interest rates, and their current debt is 0% interest rate. So the current interest rates on the current 600,000 notes is effective 0. I mean, like 0.5%. But now it's not going to be the same for the debt they're going to take from now on. So they will have elevated interest payments. They will have more debt on their balance sheet. They might dilute shareholders. So this is nothing good is going to come out of it in terms of the financial resilience of the company. And regarding the cash situation, they're also having a crisis right now because they're burned through so much cash in the last quarters. Right now they have only 600,000. They're raising 300,000 additional, so they're gonna have around 900,000. But they're probably gonna restructure already. They're saying that they will restructure already the notes that are due next year. So we'll see, but the cash situation is concerning. And now I just want to remind ourselves that they did their share buybacks just a few quarters ago with much needed right now cash, which is pretty much disappointing at this point because were they not realizing where they're heading with in terms of the cash flow? What was going on? I remember I talked about it in my previous videos where they gave this picture where they're gonna have decreased revenues, but they're gonna have still elevated cash flows because of all the cash that is coming in from previous orders. But that's not the case anymore, and it was obvious it's gonna last for quite a while. So I think the share buybacks was pretty much a little bit reckless. So that's just insight number 2. Insight number 3 is regarding the commercial. It seems like the commercial segment of SolarEdge is taking a higher proportion of its business. So I think one of the things to watch is where things are going, when the wind is blowing in that department. What was disappointing that I was kind of looking at it right now, and they don't report it separately. I mean, in their earnings call, they always just throw these numbers, commercial grew this and that, but you cannot really make sense of it and form like a reliable picture about it, which is okay. It's they have the right to do that, but we don't know really what's going. We know that in terms of megawatts, the commercial segment is taking now around 60% of all the SolarEdge's megawatt shipments, but we don't know how that translates to revenues, and I think I know the margins in the commercial segment are lower, so in terms of profits also. So but still, in terms of where the demand is going and what's going on in the regulatory environment, I think the commercial segment is the one to watch, because it seems like it's a huge growth driver for SolarEdge, where, in the United States, SolarEdge already has like together with Enphase, like almost 90% of the market, but the commercial is really super more of a young and more growing market. So yeah, thought number 4. The whole changes that SolarEdge is now forced to make in its cost structure is gonna affect tremendously its offering and its relationship with its customers, with its distributors, and its reputation in the long term. They just announced another wave of layoffs, so it's obviously gonna affect its ability to. I mean, I hope they will be still able to offer a good product that people would want, but it's gonna hurt the R&D for sure, and it's for sure gonna hurt its customer service. I mean, I already was hearing even before some negative feedback about SolarEdge's customer service, but now it's I think it's obviously they're gonna have much more less smaller headcount and less representatives, and the whole company, probably people are, from what I know, I have a friend that works there, everybody is looking for a new job, and when you work in a company that is just exploding, you just wanna jump ship as quick as you can, and it's gonna, I think, for sure affect also the performance of SolarEdge's products and the customer satisfaction with both the big commercial customers and the distributors maybe, and of course and the residential customer also. So yeah. And insight number 5 is just how much, I already talked about it, but just how much SolarEdge's performance and future, near term and long term, but more like near term, depends on the interest rates, the electricity prices, and all the regulatory legislation that is going on. Of course, we know that there's nothing new here, but just to add that also is a huge, just increases the risk, because those are things that nor the company nor we can control nor predict, and we don't know. So just to stress again, it also adds to the risk of this investment. So yeah, so what I want to do right now is just together to brainstorm, just to see if right now the price is in the 20s, or maybe from this price, everything has a price, and maybe in this price it's really just a good risk reward profile, and there is much more upside than downside, or is it not? Let's see. Right, so what I want to do right now is I'm not even going to use my usual spreadsheets where I just take more parameters and try to forecast to a more precise level, and to think of different scenarios. I want to make it really, really rough, because it is rough in this situation, and not that my method was working anyway, but just to brainstorm. So what I did, just really the most simple, napkin type of thinking of a calculation. So if we look at SolarEdge's revenue in the last few years, we see, of course, it was growing really nicely, and it has already gotten to the 3 billion mark, and now, of course, it's declining, and it's probably going to decline even more. So we can try to assume, different new revenue levels. It will stabilize in the next few years, and maybe try to think of different scenarios of what it would profitability in terms of margins could be, and then try to see what could be the price target in, 1 to probably more like 2-3 years range. So let's just go with it and play with it and see. I'm doing it right now almost for the first time also. So I think they were saying that they're expecting, but it was long ago, and I'm sure everything has changed. But let's just start with that, with around 2,400,000,000, I think. Let's just try with that. Let's say that would be the new level of revenues for SolarEdge, and again, we'll play with that and see where that would bring us. And when we look at the margins, again, very complex because it was changing so much, and the company was operating in so many different environments when it didn't have enough product, and the prices were high, but also the manufacturing was high, and the shipments were high. So and it didn't really tap into all its potential also. And then now they have the price reductions, and now of course even the gross profit margins are negative. So we'll see, we saw that at some point where it didn't really have the economy of scale yet, but the prices were high and it had all kind of elevated costs. And we saw, let's go with the 13, okay? But obviously, for me, it's really obvious that margins will only go down from this level because of the price competition, because of the prices that will go down. So let's again start, and then we'll play with it with like, I think saying 10% in 2-3 years is super optimistic. I'm not going to go with that. Let's go with 7%, okay? And we'll change that and see. Okay, which brings us to the net income of, I deleted that, of about 168,000. And its current shares outstanding is 57 million. I happen to remember that, but it might dilute more. So let's just say that it will not do further probably share buybacks. Anyway, it was not that significant, but let's just say for a second it will not issue more shares. So that brings us to the earnings per share of almost $3. And now, let's say that that at this level, the company is the growth really has slowed down, and from this level, it will probably manage to grow. Let's say, okay, around maybe 7%, 8%, 10%. Maybe it will not grow at all. Maybe it will grow like 3%. Maybe it will still continue to decline. But it's not gonna get back probably to the high valuations where the market was super optimistic and the growth was really stellar. So in terms of the valuation, we'll play with that. But let's begin from like, I don't know, a 13 PE, okay? And again, we're gonna play with all those parameters and see just what the price range could be. So that brings us to like a price target of $38, which is a nice upside from here. But what if the margins are much lower? What if it's only 5%? That's already $27. What if the revenues are not going to be 240? What if they're going to be 180? 1,800,000. That brings us to $20 price target. What if they issue more shares? What if the market is so pessimistic for so long that the PE is gonna be even, I don't know, 9? Okay, that brings us to a $13 price target. So it's not really a target; it's just a scenario. Okay. Okay, but what about an optimistic scenario? What if it manages to recover its revenues, and the commercial segment is growing and the residential segment is also growing, and the interest rates will be reduced, and the electricity bills will be higher, so people would want to switch to solar more, and I don't know, the ESG policies of Europe kick into gear again, and all that, and they're gonna show nice growth again, and they're gonna have this new level of revenues. Where I want to just also stress how much the condition of the company also affects the margins, because whenever, like we see now, that of course it's also a period of readjustments, but when the revenues go down and when everything is gloom and doom, the margins really suffer. But when everything is great and stellar, as we have seen 3 years ago, the margins are really high. So it's like the perfect storm where it's like almost exponential, when everything affects one another, and then the PE is higher also. So when everything is good, it's gonna be super high, but when everything is bad, it's gonna be super low. So again, the range and the amount of uncertainty, and then if they do manage to get to higher revenues, I hope they will be managed to finally kick into gear some economy of scale. And I don't know, I have really nothing really good to say about in terms of like tailwinds for the margin, because also the commercial has lower margins. I don't know, but let's go with, I don't know, 10%, okay? Well, let's give it, why not? Okay, and so let's say it will not dilute more shares, it will not buy shares. And then if it shows again a nice growth, I don't know, it's going back to, I don't know, 15% growth, and then the market... The market really has was burned by this one. I think it's gonna take a while until valuations are high and optimistic again. But if it shows nice growth and the earnings are expected to be really nice in the next few years, it might show a trailing PE of a higher rate. So let's say, I don't know, 20, okay, PE of 20. Then it gets us to 87% price share. So I want to say that's the most optimistic I can get. I don't have any case to get that even higher than that. Of course, I can say like in 7 years, if it begins to grow and we're not there isn't a recession and everything is going back to growth again and everything is perfect and the market is expanding, the market is new and growing and hot and everything, and it's gonna get, I don't know, $4 billion of revenues. Okay, let's do 5 billion in 7 years, okay, and it's maintains its profit margin of 10%, and it might do some let's go with the 57. They have the stock-based compensation and everything, but they might do share buybacks once in a while. Let's go with I don't know, 60, okay. Then the EPS in 7 years might be super rough, super like garbage valuation, really. The EPS might be $8, and I'm not gonna give a PE of 20, but let's say a PE of 16 or I don't know, 15. Then it might get to $133 of share price. Maybe to 166, but maybe to 108. So that's the range, okay? And I don't want to finish on that point. That's that's in 7 years. Let's go again with the probable. Let's say it's gonna be like to 7 and a profit margin of, I don't know, 7. I think that's fair, or honestly. Let's just assume it's not gonna issue more shares. And I think 13 is fair. Let's go with 14, okay? It's fair. So maybe that's the price target. I don't know. But the point is that we shouldn't take this range and take the middle of it and say that's the price target. So that might be the middle of the range, okay? But no, that's on the higher end, I think. I think my whole point is how wide this range is, which makes it really too difficult to value. And I cannot say that the risk profile here is favorable. Because we saw it could go to $12 also. So, and for a while, it's not just momentarily. Like I hold Canada Goose. I know that for Canada Goose also, but I think that it will do better in a few years. I cannot say that for SolarEdge, and that's my whole point throughout this video and the previous one. Those are my conclusions. I hope that was helpful. I hope it was not too long. So yeah, I'll see you in the next one where I continue on my thoughts where I do a little strategy shift. So bye bye.